Well, for more on the outcome of the Monetary Policy Committee meeting, we're now being joined by Esili Eigbe, Director, Escap Management. Thank you so much for joining us on Newsday.
Thank you. It's a pleasure to be here.
Well, so what do you make of the CBN's decision, to hike rates further? Was it in line with your forecast?
I was a little disappointed. I thought that they would have managed perhaps 100 basis points increase instead of 50. And the reason for that is I think that there's still a significant gap between where inflation is today and where interest rates are. I'm still arguing very strongly for a positive real return on interest, which would mean that interest rates would have to be slightly above where inflation is today at about 34%. So what I think the central bank needs to do is to push rates a little higher. I think that significantly increases the chances of curbing inflation very quickly. There's a very wrong notion, that the whole idea of moving those rates is purely to attract foreign investments. That's really wrong. Yes, it does that, but I think more importantly, it also helps to increase the yield you can get on local assets and discourage, monetizing or dollarizing whatever savings you might have. So I think that it's important for the central bank to increasingly encourage Nigerians earning Naira to keep that Naira locally, as opposed to converting it to dollars in fear or panic of, trying to manage their standard of living. As we've had quite a devaluation of the Naira, almost 90% over the last 2 years. Inflation is a cancer. It is a cancer, and it's something that needs to be tackled. I understand, the sentiments around not having to increase it further because it impacts small businesses, for example, or even big businesses. It affects everybody, okay? But the challenge here is that, like cancer, if you don't treat it, it basically disables you. And so you need to deal with it as quickly as possible. The challenge here now is that we have a fiscal policy that's running counter to the monetary policy. And it's the reason why the central bank needs to carry a lot more of the weight. So the excuse they gave yesterday for raising by just 50 basis points, as opposed to perhaps the more hawkish view that expressed in their the statement or the minutes of the meeting in the last meeting in May, I believe it was May, was that the federal government had introduced a couple of measures, including the importation of a couple of produce and basically removal or cuts to tariffs on importation tariffs of certain commodities to help to reduce inflation. I'd argue that the assumption that the federal government would execute some of those measures flawlessly is quite presumptuous, and I'm advocating basically that what the central bank needs to do, in addition to everything they've been doing, is move to an inflation targeting framework, which essentially means that you have a target in mind, inflation target in mind. Take, for example, you're targeting somewhere around 5% annual inflation in Nigeria. What that then means is that you come up with a whole host of measures that enables you to eventually hit that 5%, perhaps in 2-3 years, whatever the case is. But I think more importantly, you approach it more scientifically, but it also holds you accountable to achieving that goal and not just sort of leaving it to, I guess, chance
and opportunity. Those are two really hard things to do, but you were speaking about it being a cancer and it metastasizing. Mm-hmm. Small businesses have been crippled. They're in a lot of jeopardy and they have been crying out. But yesterday, the CBN governor says that they're going to be engaging development finance institutions for SME financing. What could be the impact of this, if anything? Is this a positive step forward or just a drop in a large bucket?
There's no country that has gotten out of inflation by stimulating growth.
Okay.
They don't go hand in hand. You need to tackle, most importantly, inflation first, and then stimulate growth. Okay? So this is where I think there's a divergence in monetary policy and fiscal policy. I don't want to believe that the fiscal side doesn't understand this because maybe to put this very simply, real growth, which is which is usually the headline number of growth you would hear from the MBS or whoever, is a composite of inflation. So you'd have what you call nominal growth minus inflation, okay, to achieve your real growth. So it doesn't matter. So let's take you for example. Even if you're working 3 jobs and you have so much inflation in the economy, right? If it's significant enough, it would pretty much wipe out all the income you're earning and make it seem like you're working just half a job.
Yeah.
So that's why it's very important that both fiscal and monetary need to be on the same page.
Well,
So it doesn't matter how much you're getting from international organizations, the IMF, whatever, to stimulate small businesses. If those businesses are confronted with high inflations as we're currently having, plus 30% inflation, it doesn't matter. They're not just going to grow. They won't grow. So those funds will potentially be put to waste. Those funds want to be coming in an environment that's more stable, predictive, low inflation.
Well, seeing as the fiscal, and monetary are clearly not on the same page, and you expressed doubts, about the government's ability to carry out all the plans, that the CBN governor said they put into consideration before raising the rates by 50 basis points. I'm wondering, if it will then be fair, to keep hiking this rate. Is the monetary policy actually winning against inflation? What impact is it having on businesses, especially small and medium-scale enterprises?
Mm-hmm. Most cripples, for example, if you've got just one leg, you tend to put a lot more pressure on the other leg, right? So it's not to discredit the efforts of the central bank. They don't really have a choice. They just, unfortunately, have to grow more muscle on that leg. To address your question, I really think that there's no choice. They understand this, and I also believe that part of the reason why they ended up raising 50 basis points yesterday was they were more sentimental than they should have been. I'm tempted to say that in making this type of decisions, you can't be sentimental. You kind of just have to be brutal, get the job done. I think it needs to be very clear that, first of all of this effort is for the common man. It's for the common man. I know it's like I was saying, cancer, right? You need to take the chemo. It's very painful. You lose all your hair.
Yeah.
But, I guess 12 months after that, things start to, perhaps return back to normal. I'm not saying that Nigeria's returning to normal in 12 months. Frankly, I think that it'll take us the better part of the next 36 months to get out of this. Potentially even more if the if fiscal policy continues the way it's going. Very dangerous.
Well, what does this mean for the average Nigerian who isn't as well versed in monetary and fiscal discussions? What does it mean for them going forward and their businesses and for life in general?
The importance of having consistent policy, monetary, fiscal policy, is that both in terms of communication, delivery, or execution, everybody understands what's going on. But I think that the way it's running at the moment, it's a bit confusing, even to the guy on the street. And so that, in my opinion, only leads to more frustration and confusion, and perhaps the incentive to perhaps, hold more dollars, hedge your bets, expect more inflation, which is the case. So the man on the street, we're in July now, so schools are already out of session. People started receiving their bills for the next session, You're being told already that school fee is going to go up by 25, 40%, and expect that the trend might probably continue by at least 25% in the subsequent year. So that is pretty much the answer to your question, is that Nigerians have come to expect inflation, and unless the government does something very quickly, and what I mean by that is consistency. Consistency, because by being consistent, you make the problem easier to deal with. Not that it's completely unusual. Seldom do you have countries where, especially in tightening periods, where the monetary policy and fiscal policy are moving in tandem. Seldom. However, given that Nigeria is facing very significant pressure on inflation, that could potentially be spiral inflation. We're just a couple notches from spiral inflation, okay? And also facing a debt problem, which could easily blow out to a big debt crisis. I don't see why the government shouldn't be taking action now. Yesterday.
Well, some analysts are a bit more optimistic than you are. They are saying that this will be the final rate hike, this year, as inflation rates, they expect it to moderately reduce going forward. What are your thoughts on this?
I think that's too presumptuous. I think that it's intuitive to be optimistic on situations, okay? But I'm going to list out a few things. We've just seen an increase in minimum wage, right? Do you expect that it's going to be inflationary or not? It's a 100% increase, right? Mm-hmm. It is inflationary. It's going to be inflationary. It kicks in immediately. Power costs are climbing. If you're not on band A, you're not too far from being rolled into band A. Mm-hmm. What's happening is that they're improving infrastructure and the quality of power. As soon as that happens in your neighborhood, you automatically roll into A. Okay? I think that it's only a matter of time, months actually, before they raise the tariffs on band B and C. Wow. And everybody else who's at the bottom joins in there. Okay? That's 2. 3 is services. You all, at some stage, are going to have to receive increases in salaries because...
Wait, what was that?
You all are going to have to receive increases in salaries because what happens typically in environments like this is that the cost of services usually lags, the inflation of everything else. Okay? It's going to kick in. Maybe not this year. It's definitely going to kick in. Okay? Otherwise, your employer isn't competitive enough and you just move on elsewhere. It's a fact. This is a fact. We've seen it happen with minimum wage. The federal government is still going to have to address this problem again. It's not going away. They've had to change the time when they review this, by the way, from 5 years now to 2 years. Mm-hmm. They know what they're doing. They want to come back to have this discussion again in 2 years and increase the minimum wage. Okay? So that's my point. You're going to have to increase salaries as well. And services, okay? The cost of running the airport, the cost of buying a ticket, the cost of everything else is going to go up. So I think it's presumptuous for you to say that we're done. The FX or the Naira has devalued in recent months by roughly some 10-15%. That will impact the cost of diesel. That will impact also food prices too, okay? Because you transport most food produce from the farms to the cities using diesel-powered trucks, okay? That's also impacted the cost of imported produce too, imported goods, branded commodities. These are real issues. So I don't really see where that optimism is coming from.
Optimism is very rare these days, but at least we tried. Moving forward, if you had the opportunity to give the CBN governor some advice or others who are in power that if you had the opportunity to give them some advice, what would be?
Well, first I would say, well done. They're doing a good job. But what I would like to see is a little more, more structured approach. And I think that would require inflation targeting. I think I already mentioned that earlier when I started out. that itself requires some level of modeling. You know, in all the meetings we've been talking about, they've had, I haven't heard anything about, you know, what the predictability levels of their models are, and what perhaps they think about the dot plot, you know, or, you know, the yield curve, and how they expect that to evolve over the course of the next couple of months or quarters. And that suggests to me that perhaps there's no model involved, no real scientific approach. They haven't figured out how, you know, when we raise interest rates by 50 basis points, how does it transmit through the economy? That is kind of what inflation targeting brings to the table. Yeah, it's more scientific approach to dealing with it. So I'll say that would be one. Two is the issue of sort of financing the government using the ways that means. I hope that that's sort of done with. As you all know very well, it's obviously very inflationary. I want to see some distance between the central bank and the government. Okay, the central bank is supposed to be independent. And to give you a very good example, I'm not necessarily saying that, you know, some of these institutions necessarily operate independently, but it's the optics, the appearance of independence. Okay, the Fed Reserve Chairman, for example, Powell, hasn't met or even spoken to the President of the United States in at least 2 years. 2 years. There's been always pressure for the Fed to begin cutting rates or ease the increase in the rates, but they haven't done that. They focused on the core mandate, price stability. So I said two things that they need to do. Number three is, I think that it would be great if they engage in their fiscal counterparts a lot more. I want to believe that's happening because I would like to believe they're more savvy than their, you know, the fiscal counterparts. And so I do hope that those conversations are going on in terms of, you know, sir, you guys, your policies aren't quite aligned. Can you get a lot closer to where we are in terms of sort of trying to tighten things? It's very important for inflation. If you do this, we can tackle inflation within a year as opposed to dealing with it in 2 years or 3 years. Those kind of conversations. Yeah? They need to engage the public, the markets a lot more as partners, and not, oh, we're throwing this communique or we're throwing this, you know, standards or, you know, guidelines. They need to engage a lot more. What do you guys need? How can we help? Tune in their, you know, their strategies to accommodate all of that, to help build confidence in the market. Okay? So I'll say that if they can do all these things, I think on the monetary policy side we'll be solid. But there's a lot more that needs to be done on the fiscal side.
Well, we hope the appropriate authorities are listening. Esili Eigbe, Director, Escap Management, thank you so much for joining us on
Thank you again for having me.